Life Insurance, Efficient and Profitable Marketing for a Multi-Line Agency, presented by DAI, Life Brokerage Services. ACMS, Age Change Marketing System Part 2, Your Client's Needs Analysis. As we indicated during our first presentation of the Age Change Marketing System, you will need to indicate the amount and type of coverage desired. This presentation will focus on answering those two questions by providing you with steps on how to prepare a brief but comprehensive needs analysis for your client. So, how much insurance will they need? Well, the answer isn't really how much life insurance they will need, it's how much capital your client's family will need at the time of the insured's death. Their need for capital on a gross basis is really a function of two variables. First, how much will be needed at death to meet immediate obligations, and second, how much future income is needed to sustain the household. How much will be needed at death to meet immediate obligations? This first category is fairly easy to estimate. It's typically the sum of final expenses, including uncovered medical costs, funeral expenses, and final estate settlement costs, and other lump sum obligations such as outstanding debts, mortgage balances, and college costs. How much future income is needed to sustain the household? This is a bit trickier. It involves calculating the present value of future needed cash flow streams. However, once you break it all down into the sum of its parts, it's just a matter of answering a few simple questions, which will provide you with a rough sense of the needs for capital that might exist. How does it work? There are several methods used to calculate a client's insurance needs. The most comprehensive is a needs analysis using an insurance needs calculator. When using an insurance needs calculator, take into consideration the following: living expenses, additional childcare expenses, healthcare expenses that may no longer be provided, other expenses, tasks normally handled by the spouse. How long will your spouse need the income from a life insurance policy? Funeral expenses. Funeral expenses can average between $5,000 to $15,000 or more. Mortgages and loans. Always allow enough insurance to pay off a mortgage and other loans. Taxes and estate costs. These costs can be as much as 40% or more of a large estate. College expenses. In 2010, for a 4-year degree, average tuition and fees were between $36,000 and $40,000 per child for a state and some private colleges. However, these costs were almost double for private colleges. Contingencies. There will always be unexpected expenses, car repairs, medical expenses, a new furnace or roof. Add an additional amount to cover for uncertainties. The ages of your children. What additional expenses could you anticipate as they grow up? The surviving spouse. A very important factor and often overlooked is the surviving spouse's income. Will they return to work or continue to work after the insured's death? Sources of income. Consider any sources of income that are received now that will discontinue, including, most importantly, the insured's income. Consider sources of income that may begin, such as payments from Social Security, investments, pensions, including if the spouse begins to work. Consider both the rate of return on investments and inflation. How long will the income from these sources last? An insurance needs analysis is for informational use only. For purposes of simplicity, we have chosen not to include some elements. When proposing the need for life insurance, it is important to remember there may be other factors to consider, such as the rate of inflation or the potential interest rate of return on investments. Finally, the Insurance Needs Calculator. Log into our website at www.dworkin.com and go to the Quotings tab. Select the menu item called Insurance Needs Calculator. Complete the needs analysis form online, print a copy, or you can even complete the form with your client over the telephone. Let's calculate your client's insurance needs. In the example that will follow, the information and financial amounts being entered into the insurance needs analysis form will represent the information you've obtained by talking with your client. Let's begin by entering in the amount of the proposed insured's annual income and the spouse's annual income if applicable. The percent you select for the annual income need is based loosely on the marginal tax rate you might pay on your highest dollars of income. For instance, a large number of Americans pay between 20% and 30%. If you are unsure what your marginal tax rate is, select 80%. Select the number of years their surviving spouse or beneficiary may need the proposed insured's income. For purposes of this example, the total income needs is $300,000. As we discussed earlier, there are many factors your client will want to consider when determining their immediate need upon the death of the proposed insured, including the sum of final expenses, uncovered medical costs, funeral expenses, final estate settlement costs, and any other lump sum obligations like a mortgage. Let's begin by entering in the amounts of your client's immediate need. For the purposes of this example, the total immediate need is $220,000. When calculating the client's total need, the needs analysis form will add the total income need of $300,000 and the immediate need of $220,000. For the purposes of this example, the total needs is $520,000. In order to identify the client's available resources, it is important to include all valuable assets that when sold or liquidated into cash can help pay household expenses and debt. Savings accounts, stocks, a spouse's income, and especially an existing life insurance policy are all good examples of available resources. Let's enter the amount of your client's available resources. For the purposes of this example, the total available resources are $140,000. The needs analysis calculator will now calculate the total insurance need by taking the total need of $520,000 and subtracting your client's available resources of $140,000. For the purposes of this example, the needs analysis calculator determines your client's total insurance need at $380,000. All of the preceding factors and more need to be considered when you're deciding on the amount of life insurance to buy. However, it is wise to always add an additional insurance cushion in the event of emergencies or other uncertainties. So for the purpose of this example, the total insurance need is now $400,000. Selling solutions, not products. Once we've been able to calculate the potential amount of life insurance your client will need, we can focus on the solution that will best fit their needs. The policy could be a term policy, whole life, or a variation of whole life, such as 20-year payment life, or life paid up at 65, endowment, universal life, or some other type. Discover what the clients need and then sell them the solution. If ever there were a piece of frequently repeated advice, that phrase would qualify. A brief explanation of temporary and permanent insurance will display. If you would like to read more, press the pause button now. Although there may be many reasons why an individual needs life insurance, it typically can be broken down into four major categories. The first being debt repayment. If the needs analysis is primarily for debt repayment, then perhaps a term policy for 10, 15, 20, or even 30 years might be applicable. The second is income replacement. If the needs analysis is primarily for income replacement, then perhaps a work-life to 65 term product might better suit their needs, or even a permanent product that is paid up at age 65. Thirdly, estate preservation. A permanent product like a no-lapse guaranteed universal life policy would cover the lifetime of the proposed insured. And lastly, retirement income. When supplementing a retirement income, a permanent product like a whole life will earn cash value that is tax deferred and can be withdrawn without incurring a tax penalty. You've supplied your client with a needs analysis. If the client is ready to apply, log into our website at www.dworkin.com and go to the Quick Apps tab. Select the carrier and complete or download one of the easy applications available online. Some of the most popular application processes are Legal & General America's App Assist, Genworth's Life Quick Request, ING's Term App Express, and MetLife's Rapid e-Underwriting. In closing, no needs analysis will foresee the future. Each insured's individual needs are unique and will often change throughout the life of the policy. Change is inevitable. It is because of this you should touch base with your client and perform a needs analysis each year and review if their existing coverage is still sufficient. And lastly, keeping it simple is always good business practice. If you have any questions about the material enclosed in this presentation, please contact DAI Life Brokerage Services toll-free at 800-777-0061 or email dai@dworkin.com.